John, what we all kind of keep trying to get our arms around is how long can NVIDIA continue this pace? And I know that you have on the street relatively high expectations going forward. We talked to one analyst this morning who said that the market cap for NVIDIA could exceed $10 trillion by 2030. Does that make sense to you? Do you think we're going to continue this pace?
I think NVIDIA has an extremely bright path ahead of itself, right? We're in the very early stages of the generative AI cycle. And, like a lot of chip companies, you get into this cadence where they're just releasing, version 2.0, version 3.0, which are just, slightly better versions of, version 1.0. But if you look at what NVIDIA is really doing, they are really still taking really substantial shifts in architectures, right? They've gone from making chips to kind of integrated, AI board solutions to now fully integrated kind of heterogeneous compute server stacks, which is, allowing them to kind of maintain their leadership above their competitors.
At the groundbreaking Snowflake Summit 2024, a new partnership between Snowflake and Nvidia was announced by the two companies' CEOs, Sridhar Ramaswamy and Jensen Huang. And this partnership is set to reshape enterprise AI and unleash new possibilities. By integrating Nvidia's full-stack accelerated computing and software into Snowflake's revolutionary Cortex AI system, they are pioneering a seamless AI platform that will allow companies of all sizes to effortlessly build custom AI tailored to their needs and data. Jensen described this as a profound paradigm shift in data processing, bringing high-performance computing to the data rather than the other way around. So, in today's video, we're going to tell you everything you need to know about this impressive partnership and what it means for both NVIDIA and Snowflake. But first, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Feels to me like AMD's biggest problem is that it's not NVIDIA.
Absolutely.
And no matter what they do, it doesn't seem to allow them to have any sort of reaction like NVIDIA gets. NVIDIA announces something new, stock goes up a lot. AMD announces something new, no reaction. Why?
I mean, absolutely. Can you imagine being AMD this weekend? You're ready to go with your big announcement, and then Jensen comes up and announces a roadmap till 2027. What Jensen's doing there is signaling to the hyperscalers and to the developers, if you're thinking about switching off, if you're thinking about building in-house, we have you covered for the next 4 years, 3 years, whatever it may be. AMD comes in, it's never going to measure up to that. They're talking about 2 generations previously in terms of the benchmark. So it's tough to be AMD right now. But that being said, I'm not fully crying for them. I mean, this AI boom has lifted them about 30% over the past year. That's good news for a company that was really struggling in the middle of a PC downturn.
Is it long-term moat that is giving NVIDIA such a big theoretical advantage, or is it just simply first mover advantage is so first and so big that it's going to take so long for everybody else to catch up?
Yeah, it's momentum, because what NVIDIA has, it has a better chip, and it has the software that all these developers are developing AI on. And so if you're an AI developer, you're thinking about this and you're saying, wait a second, NVIDIA is pretty expensive. We don't know if we're going to get the supply. Let's look at others. And you look at others, and it has to be way better than NVIDIA chips, because you're going to have to develop on a new software framework. And then, meanwhile, NVIDIA is just saying, you're already with us. You're already developing. You already want these H100s. You want Blackwell. We're going to, raise it one more and show you Rubin. Now, if you're in a boardroom, how do you then justify saying, I want AMD instead? You really can't.
If you're watching this video as an NVIDIA investor and don't really know much about Snowflake, here's what you need to know. Snowflake is a cloud computing-based data cloud company that empowers cutting-edge technologies like machine learning, AI, and generative AI to enhance data-driven decisions. The company has already partnered up with NVIDIA before on AI platforms, and now they've chosen to expand this partnership for enterprise AI. The partnership will see NVIDIA's AI enterprise software integrated into Snowflake's Cortex AI large language model. This aims to allow businesses to efficiently build and leverage specifically tailored AI-powered applications, and it's that customization that is critical in realizing the potential of enterprise AI. Additionally, the enterprise-grade large language model, Snowflake Arctic, is now fully supported with NVIDIA's software, which gives users highly optimized performance. Jensen Huang said that NVIDIA is partnering up with Snowflake because data is the essential raw material of the AI industrial revolution, and the two companies aim to help enterprises refine their proprietary business data and transform it into valuable generative AI. But what are the implications of this partnership for the companies? And should investors buy Nvidia stock or Snowflake stock because of it? Let's find out. Hello everyone, and welcome back to Investocracy. Jensen Huang made very interesting statements during the Snowflake event, as he said that Nvidia realized the rate at which generative AI is going to move, and that AI was moving faster than Moore's law, which says the number of transistors in an integrated circuit doubles every 2 years. According to Jensen, AI is doubling every 6 months, and it's clear now that it's going to move faster than that. Indeed, the market for enterprise AI is rapidly evolving, and analysts expect it to witness a compound annual growth rate of 44.1% to reach $270 billion by 2032. On the other hand, the generative AI market is massive on its own, and it will definitely cross $1 trillion by 2030. However, while Nvidia stock is up more than 130% year to date, Snowflake stock is down more than 25%, leaving investors wondering about how to profit off enterprise AI and this partnership. Nvidia has benefited greatly from the current AI boom. Its revenue has nearly quadrupled over the last 3 years, and it really improved its gross margin, which nearly hit 80% in the most recent quarter. This growth is what makes Nvidia stock a buy, and this becomes very obvious when you compare it to Snowflake stock. Snowflake's product revenue growth accelerated slightly from 33% in its fiscal 2024 quarter 4 to 34% the next quarter, with the CEO saying that AI will turbocharge the company's capabilities and growth. But the company's guidance tells a slightly different story, as management's outlook implies a slowdown to just 19% growth for product revenue in the second half of this fiscal year. For perspective, growth has never been that slow for Snowflake since it went public in 2020. On the other hand, Nvidia posted stunning guidance and earnings, so AI is only really turbocharging Nvidia's growth here, not Snowflake's. But this doesn't mean that Snowflake stock would be a terrible investment. In fact, for fiscal 2025, the company is forecasting a gross margin of 75% for product revenue. That's still quite strong, but it's a decrease from fiscal 2024's 78% margin, and Snowflake's management blames spending on AI infrastructure for that expected dip. So at least the company is going all in on AI. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Tech outperforming today with the Nasdaq up 0.5%, helped along by Nvidia, which rose nearly 5% after announcing a new suite of AI chips over the weekend and closing out its own record high. Joining us now is T. Rowe Price, Global Technology Fund Portfolio Manager, Dom Rizzo. Nvidia is the fund's largest holding. So naturally, Dom, we're going to start the conversation there, especially as we have seen this bifurcation between semiconductors and software in this new AI era, and investor skepticism about where the money's flowing right now, at least in the near term.
First off, great to see you, Morgan. Yeah, I think Computex laid out a lot of really interesting innovations that's happening all across AI this weekend, whether it's AI in the data center and the one-year refresh cycles that we're going to see out of NVIDIA and AMD, or it's AI at the edge and the AI PCs that we're going to see. But look, if we look at this earnings season, as you know, we've been bullish digital semis and bullish on NVIDIA throughout the entire year. And I think we've seen a few thesis confirming data points. First off, and probably most importantly, hyperscale CapEx is probably going to be up close to 50% this year. A lot of that is flowing into NVIDIA. And if we look at the NVIDIA earnings numbers, you know, the street started the year estimating that in fiscal 26, NVIDIA would earn roughly $23 in earnings per share. Now that number's $33. So we've seen the earnings beats come through to prove it. And so the stock's trading at roughly 33 times earnings, which I think is a pretty reasonable multiple.
In investing, just recognizing a trend of enormous significance, like AI, isn't enough. Each company's business model and place in the trend must also be considered if you're an investor looking to profit off the AI boom. In Nvidia's case, it seems like the company will remain on top of the AI market because different industries have found use cases for the company's top-of-the-line GPUs beyond gaming and recognize their potential to power AI applications, which is why the entire world is knocking on Nvidia's doors, and demand for its products remains extremely high. Looking forward, it is crucial to consider the current market and its expected growth. Nvidia is the leading beneficiary of this expansion given its leading position and competitive advantages. Its Blackwell architecture could deliver up to 4 times faster training than H100, potentially expanding the GPU market to 2.5 times its current size. In other words, the Blackwell platform represents a further push toward a future where AI becomes a commodity, though Nvidia is not producing commoditized hardware. This integrated approach likely helps justify Nvidia's valuation. With $47 billion in revenue from its data center segment in 2024, it's not unreasonable to assume that with market expansion, Nvidia could potentially generate more than $100 billion annually in data center revenue in the near term. The truth is, you can't really compare any other AI company to Nvidia, as the company had a head start in the AI race before anyone even knew that there was a race, and with its 80% market share in the GPU market, we don't see Nvidia going anywhere anytime soon. Of course, there are other really great AI stocks, including Snowflake stocks, and they could be great investments for patient investors who are willing to hold their shares for a long time, but Nvidia looks like the safest bet right now when it comes to investing in AI, so you can always buy other AI names and hedge against them with Nvidia shares. But what do you think about both Nvidia stock and Snowflake stock? And what are your expectations for the companies? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for them is. If you would like to know more about the latest updates about companies like Nvidia, then go ahead and click on the next video on your screen.